Good Sunday morning, traders, and welcome to the weekend update. Still fighting the COVID here a little bit, but feeling quite a bit better after getting on some various meds. It's early on Sunday morning, and my head was too stuffed up to sleep. So I figured I'd get up and get the weekend update done. It won't be a long one because, as you know, we closed out two positions last week. One of them for a nice gain, one of them for a little worse loss. So on the week, not necessarily a good report because of that larger loss. But this trade is looking in pretty good shape at this point, and our market is definitely in a bullish mode, as we'll look at in a moment, which is why I have this trade skewed as bullishly as I do. Now, if someone held an opinion that they weren't this bullish in the market, let me show you something that traders could consider on this particular trade. If you're like, well, yeah, I understand, but I just don't want to be that bullish. Nope, it would be easy to come in and take one of these put spreads off, greatly reducing your downside risk, keeping a fair amount of the upside profit intact. You're about cutting that in half. But that would be a possibility that someone could consider if they weren't quite as bullish as I am at this point. That changes the current delta from 4.93 to 1.26. So dramatically cuts that positive delta down. So again, just wanted to share that again as a thought or a way that people can consider managing positions like this, depending on whether or not your opinion is similar to my opinion. So let's take a look now at our market. If we take a look at the SPX, so this is why I am in bullish mode. We are making higher lows here and higher highs. So we had an all-time high here. We came back to that all-time high, did not pierce it, and pulled back. At this point, we pulled back to what I had previously marked as a likely pullback area, came back right to that spot, then have rallied back up. And then the question was, were we going to pop through or not? And then, interestingly enough, we had this day where we came back to this zone, and that was a really high volume day, which to some extent was indicating to me that we might have a bigger down move. But it was interesting that even though we had this massive high volume, the down move wasn't all that big. So anyhow, the next day, the fact that we held where we were kind of gave a little bit of an indication of maybe going higher. Then we pulled back, touched the top of this again, still did not pierce it, did not come down into this zone, and then continued to rally from there, breaking out to all new highs. And our up volume has been moderate. I mean, we haven't had what I would call a blow off top. If we get a big up day and a massive spike in volume, many times that can be what's called a blow off top, which is essentially where all the buyers that are coming in have sort of gotten in, and it exhausts the buying, and then you can get a little bit drift lower from there. Not seeing that at this point. So this is still kind of what I would call a bullish configuration. Many people would also see this as a cup and handle. We can see that right here is a cup, and then this is our handle, and now we've broken out from the handle. We could also see this entire structure here as a form of a cup, and then this is our breakout handle. So there's a very bullish patterns overall. Another thing you could potentially look at is a trend line that's kind of forming right here too. This is a very steep bullish trend line. I don't expect that to remain intact, but it's certainly bullish looking. And when I say I don't expect it to remain intact, I do continue to be bullish, but I don't think we're going to be bullish at this rate going forward here, probably past the election. I think there's a lot of optimism, regardless of what side of the fence you're on, going into election. And so, anyhow, that's just kind of how our U.S. markets run in election years. So, let's take a look at a couple other things here. Let's look at RUT. And RUT is kind of staying in this general large range. It's acting somewhat sensibly again. So as I'm looking at new trades here in the coming week, I may reconsider a smaller RUT trade here. So I'm going to keep that in mind, since it does appear to, the range seems to be trimmed back down on this. It's not making these wild, 10, 12% swings like it did back in this time frame. And then we can also look at the volatility index. And VIX was up a little bit on that sell-off day here a few days ago, but VIX has now drifted back. So as VIX continues to drift back, we will go higher. Now, the fact that VIX is still up here at this 20 mark is a little bit of a potential negative indicator. But again, the market certainly seems to be in bullish mode right now. Excuse me. We also do have some earnings that are going to be starting again this coming week. So I may look at a little bit of an earnings play here or there also as I'm looking at new trades. And my goal for the week is going to be to work to get a new set of 3 to 5 trades open, and trades that have different expirations, anywhere from maybe as short as a week or two on an earnings trade up to another probably 60 to 80, 90 day out trade as well, so that there's a little bit of a range, if you will, diversifying through a range of time on these various trades. So that is the weekend update here for Sunday, October 13th. Take care, everyone, and I hope to be out of this this COVID fit here in the next day or two. But I'm functional now, so that's what counts. Take care, everyone.